All right, scholars, we're now going to take a look at, the fundamentals of how under the equity method does your investment grow. We're going to look at the balance sheet and what causes it to change, and then we're going to take a look at the income statement and what causes it to change. It's important to keep the two separate, but they're relatively self-contained as far as understanding. Think of it like a bank account, and it should be very easy to understand what we're going to do. Let's begin. We're going to start. We make an investment. Whatever that dollar amount is, that's our starting point, right? We debit the investment and we credited the cash we paid. Now we increase our balance sheet account. We increase it by our share of their net income. Now, by the way, if it was a loss, we would reduce by the loss, our share of the account. Then if they pay out a dividend, we will not treat it as dividend income. We'll treat it like a bank withdrawal. And therefore, we will also subtract out what we call the service charge, right? That is the premium we paid for assets. So if we paid a premium for fixed assets, we then sit there and we would amortize that excess premium over the life as an additional reduction of the earnings from the sub. So that's like a service charge. So it would be debit expense, reducing the income from the sub. And of course, it would also reduce our bank balance, just like a service charge reduces it. And that equals your ending balance. So that's how it grows over and over. Well, what about your income? How do you calculate the income? So this second portion is going to deal with the income statement. We start with the investee's net income. We claim our share. And by the way, notice, we're debiting the investment that was up above, and we credit income from investee. So there's your journal entry. Debit the bank balance, debit the investment in sub, right? There's your asset going up, and credit income. We, of course, must reduce that income by our share of the depreciation on the premium we paid for various assets. And that ultimately equals, you're correct, the net earnings from the investee. So you now understand how we do both the income and the balance sheet.